Great. Well, thank you everyone for joining today's session called The New Growth Model for Accounting Firms, how AI agents are really changing accounting operations. I'm Garrett Model from Adopt AI. And for those that don't know anything about Adopt, I'm going to give you a quick introduction. Adopt builds the execution layer that lets AI agents run inside your existing systems. No rebuilding your stack, no IT projects to get started. The context will matter later on as we get into the session, but wanted to give you a brief explainer on who Adopt is and how do we help solve today. Um, Before we get into anything, I wanted to ask you all one question. I actually want you to think about it. Um, how many of you have turned down a client in the last 12 months or delayed onboarding because you simply did not have the capacity? Hold that answer. We're going to come back to it at the end of this session. That question was not rhetorical. Every person in a growth role at a CPA firm has felt that moment. The client is right there. The work is real. The answer is no, not because the opportunity is not there. And it's not because your team, but it's because your team is already at capacity. That constraint shows up in a number of different ways. Growth that stalls while you wait to hire, margin pressure, because every new client demands operational overhead and before it even sees the revenue. Competitive risk, because there are firms right now that are backed and well capitalized, who have already cracked this and are moving quite faster. This session is not going to, this is what the session is going to be about. It's not going to be about an AI abstract. It's not about a technology pitch. It's a different model on how growth works inside CPA firms. One where adding clients does not require adding people to help coordinate them. The premise of everything that we're going to talk about today is on this slide. Your firm's growth should not be constrained by staffing capacity. And the reason this currently is comes down to several kind of key areas of categories. Um, uh, and it's really kind of like the focus that your client is really helping to take. You're focusing on gathering their documents, coordinating between your teams and engagement, managing handoffs between those teams, tracking where everything is landing across the systems, and your systems really just aren't talking to one another. None of that work requires an accountant, but right now the accountants are doing it, and that constraint is exactly where agents can really help pick up the slack. So let me talk to you a little bit about how this can scale and get this a little bit more concrete before we move forward. Half of CPA firms that take, nearly half of CPA firms take more than 5 days to close an engagement. That's data. And every day that slips is a day that is delayed on revenue, and a client is sitting in a queue that could be filed or filled with someone new. McKinsey put this as 20 to 30% of finance capacity or manual data processing, nearly 1/3 of your team's bandwidth, not on advisory, not on judgment calls, on work that agents can actually be running. And 21% of finance leaders are planning to significantly boost that process automation investment in 2027. Your competitors are not waiting for a moment, for a better moment to start. The window to differentiate in ops is right now. This is not a abstract drag, it's measurable. And the firms that win are those that are going to break the relationship between new clients and new operational overhead. This framing has shown up in a number of C-level conversations across the industry. Gartner had surveyed over 100 finance leaders this last year. 3 top priorities that came up in those conversations was cost discipline when accelerating growth, proving AI can deliver beyond pilots, and scaling AI use cases inside finance operations. Nearly half of them are putting real budgets behind it right now. And here is the number that cuts through it all. 59% are piloting or deploying AI, and only 36% are actually confident it's going to deliver on those enterprise level engagements. The gap is not about ambition, it's about proof. And the case study that we're going to cover is going to walk through this answer and how that 36% is really going to get there and how AI can actually work for you in your business. So where does the drag live inside a CPA firm? Let me walk you through a couple steps. Several engagements you run today go through a version of this. Client intake, document collection, prep validation, routing assignment, sign off and delivery. The hours on each of these cards are real estimates from mid-sized firms. The intake runs, from intake where it's running 2 to 4 hours, document 3 to 6, delivery 2 to 3. Add it all up, you're looking at 12 to 23 hours of coordination on work per client. Multiply that against your entire book, and that operational ceiling you hit every time you consider, and that's the operational ceiling you hit every time you consider taking on, a new client. Now, research confirmed something important this last year. Mature agent solutions exist on all 5 of these steps today. The question is not whether the technology is there, it's whether your firm has the ability to really deploy it. And before I show you the case study, I want to make sure one distinction is made, because this is where most firms go wrong when it determines whether a deployment actually works. The 2 ways to deploy AI today is, one starts with user activated. You prompt it, it helps you. You're still the operator. This is considered a co-pilot. Most firms already have this. Most firms are underwhelmed with its development. Then we get into system activated agents. Or AI. This is very different. Imagine a trigger, like a document arrives and then an agent starts. You do not ask it to, it just starts. It runs end to end. It will reason through exemptions. It will decide. It will escalate only when something actually requires your judgment. This is the difference between a tool and an operator. The first assists the team. The second frees your team up to do the work that they actually were supposed to be doing. This is a growth opportunity. This is the growth opportunity in the growth opportunity, is not in tools. It's in the agents that runs the workflows without it being really asked. And let me take, this is kind of like where people like stop up is like, okay, where does Adopt help me here? Because, you've been talking for a little bit. But let me just tell you a little bit about how it applies to your business. Real fast is the only plug and the last plug I'm going to say. But your organization today, you have ERP systems, you have taxware, work papers, Excel, client portals, bank portals, you name it. You've built this stack over the years. It works. You should not have to replace anything to get the agents running. Adopt agrees with you. Adopt does not ask you to do so whatsoever. On day one, our proprietary technology called Zappy maps every system you have. It reads the APIs where they exist, and we have a browser interface that controls or interacts with your systems when it does not. It ingests all of your data structures, and it creates all the available actions across all of your systems. No connector, no integration projects, no IT dependency. It will figure out your systems the same way a smart new hire will with your business, just by looking at them. From there, we have another tool. It's where our agents plan all the workflows and evoke actions across your systems. Pulls and matches, validates data. It will detect the exemptions, route recovery when something breaks. They do not sit inside any one single tool. It'll move across all of your systems. We also have something called human in the loop. It's our approval checkpoint system. It allows you to put up sign up gates, exemption escalations, the ability to intervene and resume. This is where your team stays in control at every decision that really matters to the business. And every action, we also have audit ready output, meaning that there's decision logs, approval records, execution history, defensible outputs. This is where you can really see how the agents are performing, and you have that audit trail in process. Now, most of automation projects fail before they start because they require you to rebuild your stack to accommodate the tool. Again, Adopt starts where you are at today, which is exactly why the deployment pattern we are talking about and what I'm going to walk you through really matters and how it works for your systems of record. So let me make this a little bit more concrete. This is a single client engagement from intake sign-off where our agents are actually running it. We have trigger points throughout of where the agent would get engaged. And where we recommend when you're looking at tools, you think about your process for agentic workflows. So a trigger point would be client signs, you have an engagement letter, agent will initiate the onboarding automatically, welcome message, document checklist, portal access. No one in your team needs to essentially touch it. The agent will do all the work. Next would be the agent is still continuously involved, doing document outstanding within 48 hours. So the client hasn't given you the information, the agent will respond. Agent will send out sequence follow-ups, track when documents have been received, classify each document, flag when anomalies before prep begins. Still no human has been involved just yet. Next is the prep. This is where the human does come in. This is where the agent has pre-populated the standard fields. It will pull the data from connected systems. It will surface items that need professional judgment. This is where your accountant reviews those specifically, not the whole file, just the parts that actually require their attention. Prep time is then complete. Agent scores the engagement for complexity, routes it to the right reviewer, no human triggered. The next would be another human trigger point, the review approval. Agent packages the deliverable, sends the client the notification, logs everything, and the partner reviews the work and signs off. No logistics involved. 3 of these 5 steps have 0 human involvement. 2 that need the person to do that are involved for the right reasons. It's there for their expertise. It's there for their judgment. It's there for their relationship building. Now, let me show you what this looks like when a firm actually deploys it at scale. Essentially the same volume, same quality bar. On the left is the traditional operations. Staff is coordinating every missing document by email. Status chasing, consuming 30 to 40% of their operational bandwidth. Handoffs are stalling at every stage, and every new client is creating proportional demand for coordination. On the right is the agent-powered operations. Agents are running the intake, doing the follow-up automatically, status updating in real time across every engagement, routing handling by logic, and reviewers are only involved when exemptions happen and when you've called it out within the thresholds. Now, the work didn't shrink. We're not saying that it did, but the manual burden did. And that distinction, that is what matters and is the one that I want you to hold on to for the rest of this session. Here's what we see it translating to. Thousands of client hours freed annually, not eliminated, freed. Those hours move from coordination work to more advisory work, client relations, and capacity to take on more. 3 of the 5 steps I just even mentioned just right now, intake, document coordination, routing, fully autonomous. And 5, and the first live workflow is measured within months within your organization, not years. The deployment model runs in parallel with your existing processes. Your teams keep doing their jobs while the agent proves itself alongside them. And then look at the columns below. The team, what the team did before, the coordinating, the tracking, the forwarding, the reentering, what the agents are would handle now, and then what the team would focus in on after the fact, what they'd be focusing on now, the judgment calls, the client relationships, the complex engagement, the advisory work. So again, those hours freed are not cost savings. They are capacity for your firm. They are the capacity your firm needs to take on more client work and your next client. So let me tell you about a firm we worked with. They were a large client base, a very strong firm. By every measure of sense of the word, they were doing extremely well. But if it looked at actually how they were being run today, you would see some of the issues. Exemptions were handled by the inbound in the boxes, and they just kind of sat there. The statuses lived within their spreadsheets. Coordination happened over email. Every time they grew, the overhead grew faster than the revenue. it worked. But the people were really what's holding it together. There was no real process. There was people standing in front of one another, and they did try to fix it. They had RPA scripts that they built in, but RPA scripts, RPA scripts for the intake, but they broke really at the first time anytime there was an issue. For example, they submitted a PDF. One said they needed an Excel file. They had a workflow tool for routing, but it needed someone to pull the trigger for every step. The tools weren't bad. They just couldn't handle everything or anything that was unexpected. The moment that fell outside of that happy path, a human needed to deal with it. All the tools did was move the bottleneck around. What actually changed was bringing agents in. The intake started running from end to end, revising, classifying, chasing missing items without being asked to. Exemptions got routed with context, not just being flagged. Status updates were happening in real time. Nobody was coordinating things that didn't need their expertise anymore. And here's the part that mattered most. The team didn't shrink. The work didn't get smaller. What changed is what they spent their time on. Everything that didn't require human judgment call stopped requiring one, and the team was finally able to do what they were hired to do. So that's a big win for them. And they were really excited to bring in agents from Adopt into their system. Here's how they actually did it. So it was mapped over 6 steps for over 6 months period. Week 1, they just mapped. They sat down, they timed every step in the engagement lifecycle. They, from intake to document follow-up to routing, hours per client per week. There was no estimates. They were actual numbers. They found that document coordination came out as the highest volume, lowest judgment use case for them, and that's where they started. Before they touched anything else, in week 2, they wrote down what the success looked like, how agents, they wanted agents to handle 90% of the document requests without human involvement. They had 2 metrics, error rate and beats manual for how they're mapping. And they had this all written down as a single thing before anything was deployed. Because a pilot without any sort of desired or defined threshold is just a pilot that really never ends. So it's really good to have those set metrics up front when you're starting projects like this. Days 1 to 30, they ran in parallel. The agent ran alongside the team, same clients, same document, same process. One person spent about 20% of their time reviewing outputs. Nothing was cut over. And then on day 12, the agent flagged a document error that had been missed over the last 3 weeks. That was a moment for them to see, okay, the tool like an agent will actually help support them in their business. At day 30, that's when they cut over, not because they felt that they were ready, but because the data said it was. Agent accuracy matched the manual output from completion time with agent in minutes and hours. And this was the meeting that the ops leader didn't have to sell. This was done through numbers alone, which really what closed the room and said, hey, this is the vision of the future. We need to start moving this forward into agentic workflows across the entire business and across more use cases. Months 2 and 3, this is where they continue to stack on their workflows. Status coordination was their next step. Same pattern. Second deployment took half the time as the first. That's what happens when you've done something right the first time, and how you can continuously compound on the success of one process. The months 4 through 6 just continue to grow. Each workflow running on its own meant that the team shifted to higher value work, and this really took more. They were allowed to take on more clients, no additional overhead, and the agents created the capacity for the firm to really grow into it. And that's the reason I'm telling you that this is the pattern. This is a pattern, and this is something that's repeatable, not just for this team, but how you can look at it for your own business. So let's bring this into the world specifically. Imagine you being a tax engagement company today, mid-sized firm. Label this down into kind of 5 steps to look at in the hours that it took across the business. 3.5 hours per client. Document collection is the use case. For 2 hours, you can have an agent deploy that runs this from day one. Prep work, 6 to 8 hours. Judgment. This is judgment work. The agent will assist in pre-populating information and flag where your accountant really needs to focus and require their time. You get to review and routing. 1 to 8 hours, agent handles it. Manager only touches it when work is needed. Sign off and delivery. 1 to 2 hours, partner signs off on the work, not processing, not processes of how it's getting there. It's just getting to the work that actually needs to get done. Overall, this was like possibly a 17-hour workflow coordination effort of doing it manually. Uh, if you break this down, three of the 5 steps can be agent ready right off the bat. This example of a pilot candidate on document collection alone allows you to focus on the highest hours, zero judgment required, and an agent can really own it from day one. You might say to yourself, or even ask yourself, does this look familiar to your firm? Maybe it does. Maybe the hours are a little different, but I believe you. I bet you that the pattern is not any different than what you're running or managing today. And before I wrap, I want to give you kind of this like realistic picture of what getting started looks like. The honest answer on timeline is that it depends on your environment. Simpler tasks, fewer systems. Some firms are live within their first automated workflows, 4 to 6 weeks. More complex environments, private equity consolidation or multiple ERPs, you're looking at 2 to 3 months. Either way, you're not waiting years. This is not an IT project. And um, from month 1 and 2 or weeks 1 and 2, you're moving a lot faster. It's just about the mapping. We call it your coordination burden. You identify 3 to 5 steps in your engagement lifecycle where your team is coordinating instead of advising. You measure the hours, the number becomes your baseline and your business case. Months 3 to 4, we deploy your first agents in workflow, or within a few weeks. We always start at high volume, low judgment. Document collection, status coordination, data reentry, we run it in parallel with your existing processes. So you see the work before it replaces anything. And that's important. We want to make sure that you're not flying blind. 5 to 6, this is where it compounds. We're adding routing, validation, client communication, consolidating into every end-to-end workflow. At that point, you are seeing measure change. You're seeing the capacity being created, hours being freed, and higher value work. And that's where you kind of really define what comes next. These 3 stages, it's one workflow at a time. The firms that do well don't just try to automate everything all at once. They take and pick one handoff, prove it, and then build from there. For those that are joining us in the room today, depending on your role, this might land differently. And so let me talk to each of you guys individually. If you're a managing partner today, your job in this is to do the finding. Your focus on, commission of the coordination burden map, defining what success looks like before the pilot starts. You want to start the positioning internally. The firms that solve ops first are going to be the ones that really win in the consolidation wave. If you're a COO or operations leader, you are the right person to own this pilot, not IT, not a committee. You run the engagement lifecycle. You know where it breaks. Map the 5 steps this week. Identify the pilot, and run a third. And you will eventually run a 30-day parallel and control that kind of go no go decision. If you're a partner or a practice leader, goodness, the clearest way to see this is a growth question. It's which clients are you not taking on that you should be. The capacity that agents will create is yours to deploy. More clients, deeper advisory, better margin. Whatever your role, though, the pilot starts the same way, the coordination burden map. Before next steps, several objections that usually come up in the room and probably not said out loud is we don't have IT resources. The most And that's fine. The most effective first deployments were not IT led, they're ops led, where they define the processes, we have the right vendor choice picked in place. The IT gets involved at integration, not at the start. Um, we also bring to the table FDEs for deployed engineers. So we're here to build the agents on behalf of your business. We're embedded within your organization. So we help be that resource for you and your team to get up and running from 0 to 1 and 1 to 10. Next question that comes up is like, our clients will not tolerate errors. We totally get you. Run parallel first is our recommendation. 30 days of comparison data, agency accuracy, consistency matches, or that's what we're want to prove, exceeds what that manual work does today, because agents, essentially don't have bad days. They don't get distracted. They can define and you define your accuracy threshold before you start, so that the data really answers that objection within the business. Next is, we've tried automation before and it did not stick. Well, you most likely tried and most certainly did RPA first. Scripts break when everything changes or anything changes. Agents read the context, they handle variation and recover exemptions. And that fragility problem is largely solved. We cannot afford to distract from the team right now. And again, that parallel model is the answer. Existing teams keep running, one person, 20% of the time, 60 days, the firm will have what they've been waiting for. And they'll be able to see it live in action while their team is still working. Three things here is what I want you to actually do when we close the session. This week on a document, write down every step in a client engagement at your firm, from signature to delivery. Mark every step where someone is coordinating rather than advising. Put a rough hour estimate next to each one. That list is your starting point. And output here would be your coordination burden map for your firm, something that I had mentioned prior. This month, take that list and find that one step with the highest volume and lowest judgment. So it's almost always around document collection or status coordination. But you do you find what's your business and what it looks like. Define what success looks like before you do anything else. What accuracy threshold is, what time reduction looks like, or what does done mean. That definition is what the pilot makes it real. And for a pilot use case, you really want to have that success criteria that you've all agreed upon. Then the next step here is deploy in parallel. Your team keeps working. The agents will run alongside, measured hours, accuracy, and delivery speed. At that 30-day of comparison data, as you've got an agent running, working with a company like Adopt or any one that you've chosen, you'll start to see how that validity on capacity model really will help support you and your business, and a roadmap that you can really act on for the future. That's where the firms will really see the value as opening continuously with AI investment and in additional use cases. To close us out here, remember that question I asked you in the beginning: have you turned down a client because you do not have the capacity? Now you have really kind of like the model that changes your answer. The capacity is really has always been there. It's just that coordination burden that I had mentioned before that your teams have been focused on, that don't need to focus on with this new era of AI agentics. And agents can really support your business and help run the work, so your team can actually focus on what they were meant to within their roles. This is the new growth model, and really hope to see you all invest into this in the future. Really do appreciate you guys' time and energy. And if there's anything I said, come hit us up. We're happy to give you a walkthrough demo and a pilot program for yourself. Thank you.